everyone. My name is Angela Emerson. I'm the Vice President of Professional Development and Professional Standards for the Pinellas Realtor Organization, Central Pasco Realtor Organization. I'd like to welcome you to this happy Thursday. Thanks for joining us. We so appreciate you. All right, before we get started, let's go over a few housekeeping things. I'm sure many of you probably already know what I'm getting ready to say, but for those of you that may not have taken a Zoom lately, let's go ahead and go over that. If you could find that raise your hand function for me, you'll be utilizing that throughout the day. Thank you so much. I love seeing all those little hands go in the air. Kind of like an applause, you know, and that's what we'll use that for too. All right. And if you could find that chat, many of you have already been chatting with us. Thank you so much. The chat functions for general conversations and things like that. But one of the most important functions, and I know all of you are going to have many, many questions. So what do you do with that? You can see how fast that chat function scrolls. We don't want to miss your important question. So make sure you ask all your questions in that Q&A section. Find that Q&A, and that's where you want to make sure you ask all your questions, because you can see that chat function. It'd be very easy for us to miss it. We wouldn't want to do that. We have an affiliate business partner with us today, and we're so thankful for our affiliates. Her name is Paula. Hi, Paula.
Hey, good morning. So happy to be here. Is everybody ready? Well, I am Paula Blanda, insurance agent and marketing manager with Florida All Risk Insurance, but you can call me Paula the Insurance Lady. And heck, if you forget that, just call me Gorgeous. We are so happy to be a sponsor this morning. This is some crucial information for all of you. The flood changes are taking effect October the 1st. So thank you all for tuning in. I wanted to take this opportunity to tell you a little bit about myself, our agency, and our flood products. I am Paula the Insurance Lady. I happened to grow up in our industry. My dad played pro football. When he got done playing pro football, he went into the insurance business. So as a child, I was going to his offices and work. He was very passionate about insurance, and he instilled that passion in me. So you all can feel secure when you send a referral client over to me. I am passionate about helping them, and my top priority is to do whatever is in their best interest. So be sure we will take good care of your clients. Here at Florida All Risk Insurance, we're an independent agency. Well, we work with over 500 different insurance companies. Once again, when you refer your clients to us, we have hundreds of companies to shop insurance for them. That also helps us provide them with a great market share overview and the most competitive rates. And we do tailor rate our policies to match our clients. Lastly, with flood insurance, not only do we represent FEMA, the National Flood Program, which you all are going to be talking about later. But aside from them, we have several private insurance companies. Well, that's another great benefit for you and your clients. When we're shopping their flood insurance, we can look at the FEMA, the National Flood Program rates, and also quote them with several private companies. In some cases, the private insurance might be a better rate, but in other cases, the FEMA might be a better rate. Every client and every property is a risk into itself, so it's very individual. So when you send folks over to us, we can definitely place them with the most competitive company. Not only do we offer flood insurance, but we offer auto, commercial, life and health insurance, commercial buildings, commercial flood, and specifically for our property products for you all, we can do primary homes, secondary homes, condos, vacant homes, condo associations, homes as they're being built, homes under renovation. So we cover the full spectrum for you. You all can feel free to call me anytime. I'm here to be on your team and help you. I'm like you. I work nights and weekends. My cell phone is 727-565-5108. Feel free to reach out to me anytime. I'm here to be on your team, and so is Pro. I'm so proud to be a Pro affiliate. Y'all, please take advantage of your Pro leadership. They have a wealth of knowledge and experience, and they go to belt to help you be successful. And I'm a Pro affiliate. If you need anything, painter, plumber, inspector, log on to the Pro website and look up us affiliates. There are hundreds of us here to help and serve you. We are the best affiliate program in the nation. So thank y'all so much. Thanks for tuning in, and happy selling out there.
Wonderful. Thank you so much, Paula. Let's give it up for Paula. Where's all those hands? Wonderful. Yay. Thanks, Paula. Could you do me a huge favor, though, and put your contact information in the chat? Everybody wants to reach out to you.
Great. I sure will do. Okay.
Thanks, Paula. See you soon.
Thank you. Okay.
All right. Next up, we have a gentleman that probably needs no introduction, Mr. David Bennett. Hi, David.
Good morning. How are you? So welcome to another learning session at Pro, and we're happy that you joined us. We're expecting a little over 300 today. So a great opportunity for you to learn about the new changes to flood insurance coming up very, very soon, like Paula said, on October 1st. So this presentation is being recorded and will be sent out in a special email right after the session, at least a day after the session. We'll get it out to everyone so that you can take advantage of this if you're not able to view the entire session, or pass along to those in your office so that they're well informed about the changes. So good morning, Glenn. Glenn Richardson is our 2021 president, and he is going to introduce our special speaker today. Glenn, it's all yours.
Thank you, David. Today, we are fortunate to have a very special speaker, one who truly exemplifies what it means to be a realtor. Cyndee Haydon, past president of the Pinellas and Central Pasco Realtor Organization, Florida Realtor Director, and a director with NAR. She serves the 1.5 million members in her capacity as a NAR Insurance Committee member. Cyndee also serves the 60,000 stellar MLS membership as a director, and most recently has been elected to be the president of the Women's Council of Realtors Tampa in 2022. Good morning, Cyndee.
Good morning, Glenn. Thank you for having me.
Welcome.
Can I take it away?
Please.
Okay, great. Good morning, everybody. As Glenn introduced, I also am honored and humbled to recently have been asked by future NAR President Kenny Parcells to be next year's vice chair of the Insurance Committee, which I have had the privilege to serve on for the last 3 years. I want to just, before I get started, those that know me know I'm pretty passionate about insurance in general and also flood insurance. And I just wanted to quickly share 3 events that changed my life and where I come from and why it matters to me. One is my husband and I, newly married about 30 years ago, had a house fire and we lost everything. And why that matters is I understand the value of insurance when something goes wrong and getting us back on our feet. And luckily, I was the only person that had a house fire. And so the builders, the contractors, the insurance people could quickly help us. It still took 6 months, but fundamentally, we were made whole and got back through that experience. Then my high school roommate and best friend was in Miami for Hurricane Andrew. And as you know, in Florida, they were devastated. And she lived, and she was one of the lucky ones. She lived in her front yard for over 2 years in a mobile home trailer. I'm not describing it correctly, but anyway, in her front yard, and was able to oversee the rebuilding. And so I learned firsthand from her that when a crisis strikes in a situation like Miami, and that happened, that all the resources, the contractors, the insurance people, the appraisers, the adjusters are stretched to the limit. And those that have good coverage are the ones most able to get back on their feet. And so I really, again, saw what it means to real people in real neighborhoods. The third is I was a realtor in 2012 when Biggert Waters happened here. And I will never forget that I had clients that had bought homes. And at that time, the federal government instituted Biggert Waters, and it went retroactive 6 months previous. So 2 of the individuals that I had sold homes to saw their insurance go from $1,000 a year to $14,000 a year. And I remember sitting with those families, like feeling terrible as we are consultants and guides by their side, to think that I wish I had had some way, you know, none of us could have known, right, that experience. But the reality was that these people were looking and saying, I'm going to lose everything that I just saved and worked for. And so, to the credit of Florida Realtors and many advocates, our RPAC dollars and NAR, we've been working on this for 10 years. And so the system was broken then, it's still broken today. And hopefully with what I'm bringing with Risk Rating 2.0, you can see the efforts that have been put in place to have equity in action and provide a sustainable, fair system for people that need flood insurance. So that's a little bit about me. Here's kind of what we're going to cover. Also, I would just say that if you will hold the questions to the end, Angela is keeping track of them for me, and we can go over them. We have time at the end, as well as anything you want to send me. I'll do my best to get back to you on. Like you, let me just follow up. I also have helped 40 people and sold over $20 million this year. So I do sell real estate. I'm not just an insurance geek. So hopefully that helps you know, like you, I'm in the territory on the ground, seeing what people are worried about and seeing, you know, what we need. So we're going to go over a little bit about the history of NFIP. We'll look at Pinellas, Pasco, and Hillsborough. All three just had their flood maps updated through the LiDAR technology. We'll have an introduction to risk rating 2.0. We'll talk about FEMA, the rate analysis, how it's been, where we're going. I'm going to give you actual examples that insurance agents have shared with me, looking at some properties that exist today and what they would be paying, and then the properties after. We'll look specifically at the balance of what that'll look like in Pasco, Hillsborough, and Pinellas County, and then talk about, as realtors, what you need to know and how you could really use this to benefit your business and your customers, clients, and neighbors. And then I put together a set of resources that I found that may help you get more information and educate yourself, because as this presentation is titled, it is about getting the facts. And so again, we want to make sure that you have that. And then we'll answer questions, okay? So what are we looking at now? And currently in the 70s, the NFIP, the National Flood Insurance Program, was created, and it collected $60 billion. And so it went along pretty well until Hurricane Andrew and Hurricane Katrina. And so when you look at right now, Hurricane Katrina in 2005, a $16.3 billion event. You look at Harvey and at 8.9, Superstorm Sandy, $8.8 billion. And right now we're hearing that Hurricane Ida may very well top $50 billion in damage. And so we're not getting enough money to pay out the claims and the need. And so again, this is where Congress has said to FEMA, you need to find a system that can work. So then there's different kinds of policies and people right now that still exist in here, and different people will ask different questions. So I just want to give you a little bit of an idea. Of the 5 million single family homes that currently have a policy with FEMA and the NFIP, the preferred risk policies, which we most often see as X policies locally, there's 1.7 million of those currently. So again, a big, almost 2/5 of the group are in that preferred risk. Again, a lower rate typically, and we'll talk more about what that will look like going forward. About 1 million, so 20% kind of are in that full risk, where what they're saying is, we think what they're paying is what the risk exposure, if we had to pay out, would be. So they think that they're pretty close on that. Then in particular, Pinellas County, we are and have been ground zero for homes that were built before 1974. And that was before the flood insurance maps, risk rating maps came out. And so that's called pre-firm. So if you're out on our beaches or you're in older parts of St. Petersburg, you'll see homes built in the 50s, 60s, 70s. And so those didn't have any guidelines when they built. And so again, as you know, up until now for those homes, you would just ask your insurance agent and they would give you a rate, but it was subsidized. It wasn't a true rate. Now, we will show in a minute, but we did just have LiDAR mapping go on in Pasco, Pinellas, and Hillsborough. And if you're hearing this from another county, one of FEMA's goals is to have better mapping, more accurate mapping, and LiDAR technology is what they're using to get it down to almost the individual home level. So, there's 170,000 homes that might have been in a B, a C, or an X zone that now could be in a zone that requires flood insurance. We also in Pinellas County and other places have in the Tampa Bay area grandfathered homes. That's a little bit different. Those are homes that were built after the NFIP came out, but they were built to code maybe in the 80s, where the base elevation might have been 8 feet and maybe now it's 11 feet. And so they have been able to maintain the rate of when they built to the code up until now. Again, the reality is, as you saw on the first screen, risk is about covering this and being solvent. And so again, there is a risk we have to like look at and adjust and how to do that. And then we know that across the country, they've identified 12,281 high-risk coastal zone homes. So just to kind of remind you guys, how is flood insurance handled today? Basically, they only look at two things if you are in an AE, a VE, so again, if you're in something with an A and something with a V, this is where you're going to come in, because you're going to have that mandatory flood insurance if you have a mortgage. So really, it's kind of been, the places where they thought there's a 1% chance of flooding, or we might talk about the 100-year flood, but that's all they looked at, right? They didn't look at any other factors, like how close is it to water, what's storm surge, or is there any prior claims history? So again, it was very basic. And so that's part of the challenge is it's not actuarially based. It just took two pieces of information. So let me talk to you about where we're going. Okay, so you heard me talk about the flood maps were updated locally. So Pasco adopted theirs in June of last year. Pinellas County just did it in August of this year. And Hillsborough County actually is not adopting theirs until October 1st. So one of the things you may find is people there may have been some movement in the whether they're in a mandatory or non-mandatory, so an X to an AE or VE. But more than anything, what we did see, and like I'll just speak to Pinellas County, and I'm imagining Hillsborough is the same, is that along our coast, most of those that had a base flood elevation of say 10 or 11 feet or 12 feet, they saw a 1 or 2 feet decrease. So it might be 10 feet, 9 feet. But yet on the Tampa Bay, which we've never really addressed storm surge before, those people like in Oldsmar may have seen their base elevation go up 3 feet, or parts of St. Pete that are close to, again, that bay and more risk if we were to have a storm surge. I know many of you remember a year or two ago when we had a hurricane and it didn't hit us, but it pulled all the water out of Tampa Bay. And so the reality is, had that wind and storm been going in an opposite direction, it would have pushed water well into and up over homes and land around Tampa Bay. So what, again, whoever is in a B, C, or X zone is not going to be mandated if you have a mortgage to have flood insurance. So that's still the same. And again, this is so new in Pinellas and not yet in Hillsborough County, as Realtor members, you just want to be aware that somebody may tell you, like you go to sell a house and they're like, I'm in an X zone. Well, they may or may not be. So you're going to want to check with Paula or your insurance agent and make sure you've got the updated facts on that. All right, so let's talk a little bit about the last 10 years. I shared my story at Bigger Waters, how, again, it went backwards and we basically were, eminent domain and foreclosing on people, because who can take over a one payment 14 times increase like that? So at that time, NAR set up the NAR Insurance Committee, and they saw the need and began the work with FEMA to have input and make sure that they were looking at policies that would not adversely affect homeowners, neighborhoods, etc. In 2014, we had the Homeowner Flood Insurance Affordability Act, and how you'll know that is the act that allows you to see if you're in a home and it's your primary residence in a flood zone, it's not going up more than 18% a year until you get, infinitely. And if it's a second home, it's going up 25% a year. The idea there was not that the end rate that they thought was going to be necessarily any different. There's no mechanism to stop it, but at least somebody could budget for that bill every year to know how that was increasing. So in 2015, NAR set up some work groups and also hired one of the best actuarial organizations, Milliman, to study what components and what would an equitable, fair, sustainable solution look like. What should it include? What is that data? And so NAR actually paid for the report. The team had been working very closely with FEMA, and earlier this year, they shared with us, the risk rating 2.0. They asked for our input. And so what I'm sharing with you today is what we've been presented with as what we can see coming. Obviously, there's going to be outliers to everything, and again, our job and my job is to hear that input. If you see something that seems way out of line, if you're finding that these trends are not holding true, we'll take that input. But right now, you're going to see that basically this is going to be good news for, in most cases, 90+% of homeowners, and it'll be possibly less impactful to others that are on that glide path to infinity. So here's the facts about the NFIP rates today. As I said, they currently, how many of you know, put in the chat box to me if you knew this. So you know that it goes up 18% or 25% a year based on whether it's primary or secondary. But did you know that there are currently 14,000 people that are paying $45,000 a year for a $250,000 policy for NFIP? If you knew that, put it in there. Yeah, tell me that, because again, most people are shocked. So right now, the highest rate and where it is going is $63,000 a year. Now, what $63,000 a year would look like is, I would say that a home was going to flood every 4 years, you break even, right? You could almost, except for the fact that you have a mortgage, you could almost self-insure. If you got to pay $63,000 a year, you could almost better bet on that. But we don't have that choice, and we're getting a mortgage. And here's the problem. This 50-year-old system, which only was based on those two factors, there is no mechanism in the current NFIP to ever stop increasing. So if you have a little concrete block, 1,100 square foot home, and its value is, $50,000, when I go to renovate it, that's what they tell me, right? The bottom line is, you are going to pay $63,000 or above if we don't fix the system. And so what we found is actually 2/3 of the pre-firm homes in our Tampa Bay area have been overpaying. They're paying for more than the risk that actually is what they should be paying for. And as I showed you on the earlier slide, this system is not sustainable for homeowners at $63,000 plus a year, or for the taxpayers. All right, so let's talk about the 10 things that I think are some of the top benefits that we've been told are coming in risk rating 2.0. So first, again, just to reiterate, it's leveraging modern technology like the LiDAR data on maps. So we're getting a more accurate mapping. And also it's providing actuarially sound rates that are fair and easy to understand. And again, for new policies, we'll talk about, it goes in October 1st. For renewals, it'll be after April 1st. So let's go through these 10 things about what we are expecting risk rating 2.0 to improve. So right now, as I told you, the maximum rate is $63,000. Under risk rating 2.0, the max is actually $12,000. So that's a 73% decrease on the maximum that it can go to. So the worst that anybody's paying in the country is going to be $12,000. And so what we're seeing is 23% of policyholders are seeing a decrease, and many of the rest are paying about the same. So when you look at things like we've just had with Ida, and we know climate events, again, staying the same or decrease, in my opinion, has been a good win for people that are in the need of special hazard insurance. So the new policy, one of the things they're doing, as we talked about, currently we look at the base elevation and the zone you're in. Now they're going to look at different factors, and I'm not going to get into all of them because, again, I'm a realtor, but you should consult your insurance agent. They can explain if there's any things that, could help or mitigate it. But basically what we're seeing is they're going to look at how close it is to the water. They're going to look at potential modeling and impact of storm surge, right? They're going to they're going to look at the cost to rebuild, which is probably the biggest factor. So now exactly what Melody is saying is, and we'll talk more with specifics, but if you had a $2 million house and you're paying $12,000 a year compared to somebody over here with a $200,000 house, you know, we're going to look at those in detail. And I think, again, that's exactly right, Melody. Okay, so currently a buyer is able to transfer their policy to a seller is able to transfer their policy to a buyer. And that's a statutory, you know, written in, it's not changing. We've heard from insurance agents that they may have simplified the process, and you may be more like we do with portability, that you could port your savings to the new policy. And so we're getting all the details, but here's the salient point. If you're buying a house and somebody's paying $2,000 a year and the new policy, let's say, says it's going to be $7,000 a year, you as a buyer could have the seller transfer that policy and stay on that 18% glide path. So again, unless somebody has no insurance, there are very methodical, fiscally responsible ways to get to where that is. And so again, they really wanted to avoid bigger waters with that big surprise and that financial weight that people could not hold. Okay, number 5 is a big one for us. It's a big one for me as a realtor. One of the biggest challenges I have when I'm helping people buying in a flood zone is I can't get a quote until I get an elevation certificate. If you've had that experience, put it in the chat. Tell me, do you find that you're in the process of buying this house, you've done the inspections, and I'm assuming the seller doesn't have one, so I'm finding the inspections, I'm doing the appraisal, I'm getting a survey, I'm now over a month in, and the buyer doesn't know what that's going to be unless you're in a pre-firm, okay? So now, because the elevation certificate is not directly part of the new risk rating in the way that we've done it in the past, it's not required. So who would be excited if I told you that now you could even have a home you're thinking about writing an offer on, and if you got Paula working on the weekend, you could ask her, what is the flood insurance going to be on this policy? And she could tell you. Who thinks that would be an amen, good thing? Be excited about that. Yeah, show me in the chat. Exactly. So I think that, again, that's a huge thing for us as realtors, because none of us want people to get in over their head. And also, honestly, I don't want my buyer that I'm helping to spend $1,000 to find out that it's going to, you know, tank their mortgage, tank their affordability. So again, this is super exciting news and a great asset for all of us to help people make better decisions. All right, 5 more. So they will maintain the 16 to 8% cap. So again, there should not be big jumps. So if somebody has a policy today, regardless of what's changing, they can expect to see that rise by whatever percentage they're in, if it's primary or secondary, 18% or 25%. And in addition, if somebody is buying that home, especially if it's a primary, they should be able to transfer it and continue on that glide path. Okay. So again, are you with me so far? I mean, so far we're basically, you're still going to see it, even if it's going up, it's going to be smooth and not like the time bomb that went off with bigger waters. So I said before, the new highest rate is $12,000, which again is a lot of money, $1,000 a month, even though I do know people whose car payments are more than that. If you look at the policies out there today, there are over 45,000 people paying over $100 a month, and the max stuff then going forward, right? So they're predicting that there will be 3,200 people versus 45,000 in that top category. So again, this good news as we go forward to see that, yes, there are people that will have risks that require the top rates, but it's a much smaller number. Here's the biggest thing I want you guys, whether you're a lender, whether you're an insurance company, whether you're a realtor, I want you to be thinking about, because I've already had it happen to me. If somebody comes to you and has a big rate, shows you a big rate, $8,000 for flood insurance, pause and ask, one, especially if it's a change, like, did their flood map change? But more importantly, what's the value of the property? And also where is it around risk? So what I'm seeing is that properties that were along our beaches that are, frequently over $1 million, have been paying artificially low rates. So say $2,000, $3,000 a year. While people in, say, Largo, Pinellas Park, St. Pete are paying that same $2,500 for a home that's 1/4 the value. So really what we're finding is that a lot of lower valued homes are subsidizing the high value homes. Now, this isn't just out there to penalize high value homes. Let me tell you why it impacts the data. When we talk about one of the factors now and the cost to rebuild, if I have a home that we all know this, if I pay $250 for a home in Largo, the home is not $250, the land is a big piece of that. So the cost, if it has a flood, is not going to be $250,000 to redo that. The cost to redo it is incremental to the value of that home. Over on, you go to Treasure Island and you go to a $2 million home and they take on a flood claim, and the odds of it getting to $250,000 are exponentially greater because of the value of the home, the size of the home, all of those factors. So again, it makes perfect sense, but what I want to caution and what I need your help with is we live in a world of sound bites and attention grabbing. And it's not uncommon for people to want to say, flood insurance going to $10,000, just help me and help our industry pause and get the facts. And that's really what we're talking about today. Know the facts. And again, like I said, there will be some in that situation. Overall, what we've been seeing is really good news. This is actually a big perk. So right now, in a lot of our cities, in Pinellas County, Hillsborough, I'm not sure about Pasco myself, but in your neighborhood, wherever you are, are they involved in the community rating system that is to lower flood risk, to do mitigation and to get discounts? Those discounts right now can be anywhere from 5% to 45%. So when you look at your flood policy, you can see, City of Clearwater, 30% comes off because of CRS or whatever. So what's interesting about it is up until this point, the only people that got that benefit were people that actually had a high risk property. Now, all properties, so if you're in an X zone, a B zone, a Z zone, thank you, Marianne. So in Charlotte County, it's 25%. So you're gonna now, say you're paying $1,000 for an X policy, but you're in a 25% discount, then you would get that discount as well. So that's a nice perk for people in that X zone, because we do know that 30% of claims happen in non-special flood hazard areas. And then I think the thing that for me is so, this will wrap two benefits together, but again, because I deal with a lot of people that are pre-firm, built before 1974, I have always worried for them that if they got away from it, if the private insurer they were with folded, or, it was uncertain. And I'll make my own analogy. My husband's retired from IBM. We have IBM health insurance. And when Obamacare came out, I said, I don't care if I have to pay more until I know that my options are secure, because once I left, I knew I could never get back. Right or wrong, that's been my personal feeling. And so for a lot of our clients who have said, hey, private insurance, as Paula said, there's a lot of options. I'm hearing about people that are packaging solutions, because when you have a flood claim, you have a flood deductible, but if you have to live out of your house and have it repaired, you pay another homeowner's deductible. And so there are companies that are packaging that, so you have one deductible, and they're just things that are looking at the needs, looking at the market. And I don't feel like a lot of our homeowners have felt empowered to really trust looking at those and taking advantage of them. And so I think that, wrapped in number 10 for me is that there's so many more options for our clients that we need to help them get connected with really good insurance agents that can give them really good advice. And for me, it's taking out the fear, uncertainty, and doubt. So tell me in the chat if you've ever been someone that sells a home on the water in a flood zone, and you worry that your clients may not be able to afford it in a few years. I worry about that every day. And quite honestly, my husband and I, when we moved back to the beach 3 years ago, I moved into an elevated structure because I didn't think I could afford to keep up with the cost of flood insurance in a home that sat on the ground. And so, you know, again, as realtors, we care about the people we serve. We care about our communities. And so, again, this helps me feel more comfortable giving people a better picture of what to expect. And here's the deal. In knowing those numbers, if financially it doesn't feel comfortable, what a better way to help them be someplace that is sustainable and that can be a good fit for them. In addition, I would wrap all of this and say that there's never been a better time to sell your home. So if you're working with a client and you end up having, they end up saying, look, where this is going, I'm not comfortable. You tell me, do you think you could sell it and help them find another home in this market? Tell me in the chat.
Hi, Cyndee. We do have a question in the Q&A.
Yeah, we're gonna cover some rate stuff. So I saw that.
Okay.
I think. Is that what it is?
Yep.
Yeah. So we're getting to that.
Okay. Thank you.
Yeah. So what's staying the same? So what is not changing is that if you have a single family home, you can still get $250,000 worth of coverage for the structure and $100,000 of contents. Also, commercial properties can still get $500,000 for the property and $500,000 for business contents. And then Paula's saying private carriers can offer higher coverage as well as excess coverage. And that's why, Paula, I hope you'll stay on to the end because you may be able to help us with some of these questions with, you know, holding an insurance license, and I don't pretend to be one. So thank you for hanging with us. We are still, as I said, going to have the 18 to 25% max increases for existing or transferred policies. And you will still be required to have flood insurance if you're in an A or a V zone and you have a mortgage. So I put up here the ones we see most often, A, E, V, E, but A, O, A, E, I mean, all of that starts with an A or starts with a V, you know, are in that mandatory. And if you want, like I said, when we get to the resources, you can look that up more for yourself. The community rating discounts are still going to be in place, and they're just going to extend to everyone's policy instead of just the ones in the special flood hazard areas. And elevation certificates are not needed. But if you are in a situation where it will help you get a more favorable rate, so say you've elevated the base elevation, you know, or you're higher, again, Paula will tell you that you can get very favorable rates with that information. So if you think it helps, if you've done mitigation, definitely all of that still applies. However, it's not needed. Okay. All right, so here's a look at what FEMA has put forward as how they think the numbers are gonna fall out. I'm going to show you after this. This is the 5 million policies. I'm going to show you specifically Pinellas, Hillsborough, and Pasco. I'm going to give you a link to where you can find that graph for every county in Florida, as well as a link to where you can find the information for every state down to the zip code and county level. Would that be helpful? Okay, so we here look at, on the far side on the green is saying 23% of people that currently pay into the NFIP and have a policy are going to see a decrease. And on average, they think that's going to be $86 a month. So that's telling you that, again, a lot of people that currently have this are overpaying, which we talked about earlier. About 66% of the people the rate's going to stay the same, or maybe up to $10 a month, which is $120 a year. Then you've got 7% that are going to see a $10 to $20. So that's up to $240 a year. And then there's 4% on that higher end. And what, in looking at the zip code data, what I've seen is a lot of those might be, you know, $50 ranges. And I'm going to show you how that's already happening today to a lot of homes. So again, put it in perspective, but remember that of that group, 12,000 is now the highest amount they're going to pay. And currently there's people in that group paying 45,000 a year, headed to 63,000. All right, so let's look at Pasco County first. So here's a map of what they're expecting for Pasco County. And so what this says is, like the previous graph, almost identical. They're seeing 4% of the people will be in that top rate category. I'm imagining those are probably people on the coast over there, Gulf Harbors, and again, Newport Richey, that whole area that again hugs that Gulf coastline. 23% are going to see an immediate decrease. 60% are going to see, again, $120 a year or less, and 12% are going to see $240 a year or less. Now, I want to ask you guys, and just stick with me a minute here. That is 96% of the people that are going to see an increase of less than $20 a year. Now, flood insurance, gasoline. I mean, look at the prices and look at where we are. Is this good news? Tell me what you think. Tell me in the chat, do you worry about this for your clients? Do you worry about where it's going? And is this helpful for them to now be able to plan and have a good idea of where things are going? Okay. So Pasco County, from a risk perspective, that affects 18,062 homes that currently have a NFIP policy. Next, we'll look at Hillsborough County. Hillsborough County has a few more. You've got 47,700 homes that currently have NFIP policies. Of that, 15% are overpaying and going to see an immediate decrease. 63% are going to see that only $10 a month more, and 15% are going to see the $20 more. So again, you've got good news, in my opinion, for 92% of these people. So these are your clients, your neighbors, your friends. 8% will find themselves in, that's a total of a little over 3,800 properties, in that over $20 a year. Again, look at the map. It makes sense that you've got South Tampa, you've got Apollo Beach, you've got Town and Country. All of those are on the bay. We know the storm surge is a real risk. We know we've been fortunate and lucky, but none of us can deny that the risk is there. I would much rather have it rated and be funded and sustainable than not. And here is Pinellas County, and this affects 57,401 homes. And so Pinellas County is, because of the nature of our county, first of all, you'll notice we are a peninsula on a peninsula. So obviously we are surrounded by water and definitely have more homes that would be, you know, at risk. But the other piece is we have one of the larger numbers of homes built before 1974. And so again, it makes perfect sense that we're going to see those homes moving to a more true rate. And lastly, if anybody's looked, you know, our prices along the waterfront are extremely high. And so again, it's not uncommon to see homes 800, 900, $1 million, $2 million. And so again, you're going to see that factored into the rate, but I'm also going to show you how we already were in that 15% and rising category in a minute. So even if you're in Pinellas County, you have pretty good news for 85% of the people out there. And so again, you know, that's our job as advocates for them, to help share this message and help them understand and help them connect with people that can find out about their specific options in their specific property. Let me just back it up a minute. I have looked and I'll show you later, all over the state of Florida. I will tell you the two other places that three other places that kind of pop out with similar ratios. Charlotte County has 16% of the people that are in that, where we have 15% of Pinellas County, they have 16%. Monroe County down in the Keys, about the same. And Citrus County, ironically, has about 13% in that. But again, realize these are all places that have large coastal fronts and older homes in many cases. And so again, just like I said, as we go through and we see this stuff, pause, get the facts, and help people understand their options. All right, so let me just give you, someone was asking me about the math. So in 2015, FEMA did a study, and the average, Milliman actuarially said in Pinellas County, the average NFIP policy was $2,700 in 2015. That was 6 years ago. So if you look at just going up 18% a year, and not all of those were primary homes, many of them were second homes, but do the math with me here. So in the first year, 2,700 turns into 3,186. That's a $41 a month increase. In year two, it's a $48 a month increase. In year three, it's a $56 a month increase. Do you see why I'm saying that we're already a frog in a boiling pot that we just don't know we're on a slow death, right? That this is going to a point where it is not where, well, you know where it's going. It's going to $63,000. So can you guys, I mean, give me some feedback here. Can you see how, again, for a lot of people, we don't really shine this light on it, but when they hear the numbers, they need to understand where we are, what their options are today, and why this is something that they can plan for and be a better option, or sell it to somebody else and move somewhere else. Here is a recent example from a local insurance agent gave me. It was a $260,000 block home in Seminole, not on the water, built in 1960. So our basic concrete ranch home. And now they were currently paying, they would have paid $2,040 for NFIP coverage with no contents. And with the current NFIP to cover the contents, it would have been $3,377. So now look at what they're going to do under risk rating 2.0. In risk rating 2.0, they're actually going to save $30 a month down to $1,683. And if they had $100,000 in coverage, they would save over $100 a month. And so when I'm doing the math, and again, I'm a realtor, not an insurance agent, but I'm just trying to like get perspective for myself. I'm looking at the value, like in the MLS, divided by the coverage, you know, and the value of the home. And I'm finding that the insurance rates coming up are about 0.6 to 0.8. And again, I'm just a girl like trying to figure it out with the rest of you guys, but I want to say this because it's important on the next slide. So then I had a local insurance agent say, oh my God, the sky is falling. There's $1 million home in Treasure Island, and its NFIP is going to be $7,669. And the current rate is $2,488. So here's the deal. They've been lucky. They have gotten everybody else covering that cost. It's not a true actuarial cost. And at the end of the day, for $1 million home, relatively, it's 0.76. It's not even 1% of the price or value of the home. So again, I mean, intuitively, I think we all know it. And, you know, altruistically, we'd like free lunches. We'd like everybody to get, you know, a better improvement. But the reality is we got to have a reckoning. And if, again, fair and equitable, I think we're really close. And I think, again, our job is to help feedback to NAR and to FEMA if we find places that aren't working and not what they purported. Okay, so risk rating 2.0, it is starting October 1st. At this point, to get a flood policy, the only people impacted right now between now and October are people that are buying a home and closing, because it takes 30 days if you don't have a policy to get a policy, and that time has passed. So All new policies, October 1, risk rating 2.0, or you assume the sellers and stay on the glide path. In April 1, then at renewal, it'll be risk rating 2.0 and the glide path. Does that make sense for everybody? All right. So I've got more down below, but basically risk rating 2.0, NFIP, FEMA has put together NFIP transformation at their site, explains it, gives a lot of details. So again, I just want to give you that location. I'll have some more resources below. So again, just kind of summarizing for you guys and for me, what do we need to know? So some things to look out for is, first of all, we're not insurance agents. So again, you definitely want to connect your clients with them. But as a realtor, things that are helpful to know. If you have a property under contract, scheduled to close before October 1st, I'm going to show you the website down below. If you have a property scheduled to close before October 1st, and there might be a delay, you need to, I would encourage you to talk to your insurance agent and understand if it closed before October 1st and after October 1st, and make sure that it didn't impact funds for closing, all those kind of things. So there could be a cost difference. And again, we know we prepay a year of flood and escrow and all of that. And you could imagine that could really mess up a mortgage. It can mess up a closing. It can be cash on hand. So that's all happening. So be aware. If you have one in process and it's supposed to close before October 1st, there could be consequences on the flood piece. So you need to check it out. Second is, with the map changes, and we're still waiting on Hillsborough, so we have 2 of our 3 counties done. There may be homes that were in an X zone that are now required to have flood insurance. So again, people may be reaching out to you. People may not even know. You may go to list a house and you may find that that's a situation. So you're going to want to get additional information. Again, we want to encourage our clients and friends to consult insurance agents with flood policy knowledge. I would also encourage you to make sure that you have really knowledgeable, thoughtful, calming insurance agents, right? The last thing people need right now is for someone to yell fire in a full building, right? So again, let's get them the facts. Let's get them, make them a decision, help hold their hand and guide them through it. Keep it calm. And then remember that if a seller has an existing policy, the new buyer is able to have it transferred to them. Now, I've heard two different things, so I don't have the facts to tell you yet. Prior to October 1st, there was a form that a seller had to get from their insurance agent and sign and let the buyer transfer the policy. The challenges in the past have been if the seller's coverage was not enough on the home, maybe they've had it a long time, the mortgage person may not say that's enough coverage, or other aspects of it that could have, made the transition hard. So Tracy Bear from North Shore did a presentation this week. She said that the way that they're seeing it handled is new and streamlined, where if you have an existing home and you're selling it, that those credits kind of come across to the new buyer, and the current insurance agent writes a new policy and uses the savings credits. In my mind, it sounds like it might be working like our local portability. But again, I would talk to your agent if they haven't heard it or know. Keep talking. And Paula, maybe you can post in the chat if that's been your experience. That is a question we have. Would love to get that clarified because that would really simplify it. I will tell you that currently in the Florida FAR contract and the as-is contract, it says in there that the buyer has the right to assume insurance. So the seller should work with the buyer. It's in our contract. So again, if you have more questions or need more information, we're still figuring that piece out, but stay tuned and be aware. And also be aware because again, it may save deals for you if the policy is going to have a big change, but somebody's willing to take that on over that glide path period. Just like I showed you on that previous slide, 2,700, it would take a long time to maybe get to 7,000. And so, so that you want to, you know, make sure they're connected with someone that can explain those options to them. Again, don't assume anything right now. Get it validated. You know, the code of ethics tells us to deal in our expertise and what we know, and what we have training in. And so again, we need to lean heavily on our insurance resources and people. Again, as Paula said, we have many that are affiliates at our associations that have been vetted and be trusted resources. So again, that would be my best advice on that. So this is particularly important to me. I think there's a huge opportunity, and this is why I've taken it on myself to help my realtor family understand this. And that is, we have an opportunity right now to bring great value to our clients, our sphere, our neighborhoods, because as you saw, let's just call it 90+% of the people are getting good news, right? And even the 10% that are getting news they may not love. How many of you in a transaction, I mean, it's when we stand in the fire with people and we help them understand their options and we help them navigate and get the best answers and solutions is where we provide our value. And so I have the chair of the insurance committee when I was working on a project at NAR, she said to me, if real estate were a religion, advocacy would be our good works. Now, here's the problem with this. This isn't church, and this is not like keep it secret. This is what we do, and I believe it's what we do better than anybody, and it's the thing that our consumers value the most, and we don't do a great job of communicating the message and showing the value. And I believe you have an opportunity right now to bring value to those people. I believe in real estate, conversations lead to closings. And I think it's much more comfortable for me to have a conversation about how we're advocating, how we've helped, what's coming. And if you need to get more resources, I can help. Then have you thought of buying or selling lately? But again, you do you. I just think this is an amazing opportunity. And I would say to anybody that's newer in the real estate industry, sometimes it's hard to outperform people that have been in the business 10 years, 15 years, 20 years, right? We have been doing real estate a long time. We are good at what we do. But I guarantee you that you can take advantage of this information, learn this information, get the facts down and share it with people and be seen as a trusted advisor and someone that is impactful and worth having real estate conversations with. And so for even our newer agents, I think there's this huge opportunity that I hope is not squandered. I've shared with you this 10-year journey, but what I really have to tell you, next year I'll be a Hall of Fame for NAR RPAC. And I didn't used to give to RPAC before I became on the board of Pinellas Realtors. It wasn't until I really saw what we do. But if this year, I mean, for what I've seen in this past year of how we've advocated for the PPP loans for the contract workers like ourselves, this has been 10 years in the making, and we have made a difference. NAR and RPAC got us a seat at the table, got us a seat with FEMA. Never before has there really been a collaboration of a government organization to define a project so closely. And so I would encourage you to consider being proactive. If you wait until October 1st, the news, I guarantee you, is going to say the sky is falling, rates are this, they're going to find the horror stories and they're going to scare the bejesus out of people. It'll be Halloween early. So what I am encouraging you is you be the messenger, you be the hero to your community, you be the advocate. And for me, I'm comfortable knowing that I give my fair share to RPAC, that with $20, $25, I can look anybody in the eye in my neighborhood, in my community and say, I fight for you. I invest in this for you. I protect your private property rights. And I would love to update you on things that are changing. If you're interested, let me know. And again, be part of the solution, own it. and then connect them, as Paula is saying, with insurance agents that you trust to get them the good information. Because I do think that we may see that the private sector is going to have some solutions that are going to be even more advantageous to the property owners and to getting real estate transactions done. Can anybody imagine themselves sharing this and maybe looking at this and taking it from a different perspective and seeing yourself? I often joke and say, you know, I think that being a key contact, being that advocate to your sphere, I believe that that is a winning hand in business. And again, for my own personal business, it's let me stay in my clients' lives long after the real estate transaction and have them turn to me as that trusted advisor and that resource to connect them. And again, I think when people talk about disruption and they talk about iBuyers, they talk about different things, you know, my biggest comment is, in the absence of value, price matters. This is a great way, I believe, to add value. And so again, please take the opportunity. I have actually provided you here with places you can go to get more information. Again, the second one, the risk rating 2.0 graphs for Florida counties, and that is done by an organization here in Pinellas called No Floods. They have actually, those graphs I showed you for Pinellas, Pasco, and Hillsborough, they have every single county in Florida already really pretty and made for you. So again, that's a great one. I tried to make it easy. It's a bit.ly FL NFIP graphs. If somebody wants to type that in the chat, people probably have an easier time. FEMA's official risk rating 2.0, where they have videos and explanations, is www.fema.gov, the NFIP transformation, excuse me. I also put in this really helpful thing on FEMA with the flood definitions and Flood Smart, because I think a lot of times, you know, someone says, well, what's grandfathered? And you might think that's pre-firm, or what's this, or what's that? And they ask you a question. And again, it's just a good place to educate yourself and get more information. And then if you're from somewhere outside of Florida and watching this, you can actually go to the FEMA site. And I just, again, made a bit.ly link, risk rating by state, where you can get the data of what they're projecting by zip code or by county. And so I actually, in Pinellas County, I took a deep dive on the 10 most impacted zip codes to see, like, how does that spread and what could we expect? And so again, I'd be disingenuous if I didn't say there's going to be some people that aren't happy. There are going to be some people that, you know, get numbers that they're not expecting. I hope what I've done here today is give you the facts, one, about why it's changing, two, about how proportionately and equitably it spreads. And again, we have to have a system that supports overwhelmingly the majority, and again, also looks at the value of homes and the risks in there, and be an actuarially sound system. The one thing I forgot to tell you, and let me just tell you quickly, risk rating 2.0 gives everybody a clean slate on past claims. So if you've had a flood claim in the past, everybody is going into risk rating 2.0 with no history, no penalty, no rate factoring. After October 1st, if you have a claim it'll stay with the property for 20 years. And so for homes and properties that have repetitive flooding, that is where we lose a lot of money. And again, that's you know, a challenge that they've decided to take on. So also know that, you know, again, going forward, when you have a claim. And so again, you know, one of the insurance agents said, that's a really good reason, again, when something happens, to reach out to your insurance agent first. Find out, is it worth making the claim, or maybe there's, you know, worth making your own repairs. Like, just really understand what that's all about. Again, a lot to it, but prior claims are not a factor on day one. However, any claim after will stay with the property for 20 years. So that's, I think, what I've got for you today. Again, I'm open to questions, Angela, and Paula, if you're there, like I said, I hope I've done it justice. It's a lot to take in. I really, the reason that I have taken my own personal time is because I want us to be the messenger out there in the community. And here's the deal, whatever bad news there is, whatever unexpected news there is, it's not going to change it, right? We're going to have to handle that, just like in a real estate transaction. Something unexpected happens, we have to handle it. But why not get in front of it and be the messenger, help your clients not be freaked out, not be afraid, help them understand if they're seeing a big increase. You know, I mean, for yourself, ask yourself, what's the value of the home? You're probably, people have asked me how they calculate it. They're getting that data from CoreLogic. So anyway, they buy data for all this stuff, but anyway, that's hopefully what you guys can do and share this. And when David gets done with this video, please share it with other realtors that you know that couldn't be here, even across the country, because their story's the same. And again, I've given you the resources to help them get the information and the facts that they need. And so, like I said, thank you. And if you see crazy things in the process, again, please share it with me. Please don't scream at me. I'm a volunteer. I do all this because I told you in my own personal life, what I've learned is that insurance is there to help people get back on their feet and financially be as whole as possible. And it does me no good in my own community to have a crisis hit and my neighbors not have the coverage they need for us to all move forward. And so that's my heart and that's my passion. I hope I've helped you with that today. Thank you all for finding value in it. I appreciate it. And again, I will now turn it over to Angela and Glenn for any questions.
Yes, Cyndee, we do have a few questions in the Q&A. I'm in Bay County, and oftentimes homes in the AE are pulled up with elevation certificates. How does that factor in?
Hey, Cyndee, perhaps I could give some insight on that.
I would love for you to give that insight.
Okay, well, it's Paula, the insurance lady here. And my understanding, and it's still a work in progress, I think, with us agents, because it is a lot of new information, is that if an elevation is helpful, in other words, the homes are built up above the floodplain, we can still use them and it can still help provide discounts.
That is my understanding as well. So, the, again, as we said, all the mitigation factors can help. They're just not required.
Correct. You could have an elevation. Let's say it was an older house built in the 50s, built on a slab foundation, and it's in a risky flood zone. When you get an elevation on those homes, those tend to be built below the floodplain, so the elevation hurts them and hurts their rates. If they're built above the floodplain, then that helps give them a credit. So it's very individual. Each property is unique into itself.
And that's where we're seeing, interestingly enough, in Pinellas County, some of our coastal that would have expected the impact to them may be less than homes that you see on the intercoastal fingers or in the Bay, because their base elevation was lowered, and so their differential is less, whereas on the other side where it went up, their differential and how that is, they'll have, you know, so Paula can give you those specific quotes.
And especially in our areas, you've got a new built house that might be built up 12 feet high next to a house from the 50s that built on a slab. They're neighbors, but their insurance and rates are vastly different, even though they're right next door to each other.
Yes. And I think one of the points to be clear, if you walk away, is up until, and you correct me, Paul, but up until right now, until October 1st, or we can get it, Paula can get it now. I've never known how, well, I didn't even, in myself until recently, I didn't know it could go to 63,000, because I probably would have fallen over and had a heart attack. But I didn't know how high it would go. When I'm sitting there selling somebody a home on Madeira Beach and it says the flood insurance is 4,000, in my mind, I'm going back to bigger waters at 14,000 and, you know, 18,000. I didn't even know that 63,000 was a nightmare that could be real. But I love for myself to take away that fear, uncertainty, and doubt, right? We now can help clients get good information to make good decisions. And here's the deal. I'm not their mother, I'm not their financial planner. I mean, I just want to make sure people have good information to make good decisions. And if it's not affordable, we're doing them a service, helping them know that now, than to put somebody in a house where maybe the market's not as favorable 3 years from now and it's going over their head. And they're like, I can't, because that's in 2012, you couldn't sell a house. I mean, the market values at the beach went down 10%, right? It froze. So I think the timing of this to that degree gives people a lot of options. They're in control, they'll have information, and they'll have lots of options, and they can decide.
Yes, and I had also put a chat on there that there are more private carriers set to open up. They're working on, so we might even have more options with more private carriers, which is good news for our area.
Well, and that's what I'd heard, Paula, is the private market isn't that incented to try to compete against an unrealistic, subsidized fake rate. I mean, when you start getting everybody on a fair playing field, then we can start to balance out, what's real, and everybody, has that. So definitely.
Exactly. And some lenders, we're seeing a trend now that some of them, let's say we're the home building to replace it is 500,000. That's more than the FEMA's maximum of 250,000 right now. Some lenders are starting to require that dwelling to be increased. If that's needed, there is excess flood through FEMA or with the private carriers as well. So some lenders are starting to require higher coverage.
And Paula, one of the things that I haven't had a lot of experience with, but someone mentioned in a presentation the other day that I listened to, is that condos that are 1 to 6 feet may require additional flood insurance outside of the policy by the lender. So that they may say, okay, your risk is greater on the first floor. We want you to have extra, even though the things. Have you seen that?
Yes, I have, especially with first floor condos in AE and VE zones. I have seen that as a directive from the lender. So then the unit owner can purchase their own separate coverage that enhances the master flood policy, and that is available to you all.
Perfect.
All right, some more questions from the Q&A. If the max coverage of a flood policy has 250,000, what difference does the value of the house make?
Oh, that's a great question. That does currently affect the way they rate them. If we say to rebuild this house is 500,000, but we're only insuring it for 250,000 to your maximum, that, as we stand now, does have a factor on the way they rate the policy. To be honest, I'm not sure about the new program after October 1st, but I could find that out and let you all know.
So, and let me see if this is the question, just backing up. If it's 250,000, I mean, if it's $250,000 of coverage today, everybody has the same, regardless of the value of the home, or regardless of anything today.
Well, right now, the way they factor the rates, when we go in and put in right now the current replacement value of the house, and let's say it's 500, but we're only covering it for 250, they rate it at a certain amount. If we go in and say, what if it's a house worth 250 and we're covering it for 250, we put that in the system and the rate may change a little bit. So it is currently a factor in the rating, even though we're providing the max coverage.
Okay.
And I'll find out about after October 1. I don't know if it will affect the rating or not.
So what we're being told is that the cost to rebuild will impact the rate that you get. And it sounds like you're kind of seeing that already. Maybe that's because it goes over the amount, but the same thing is just that that's going to be a bigger factor. And again, it's actuarially, the way it was explained to me is because if you have, again, a $250,000 house versus $1 million house, they both have the same flood. The cost to repair is more on the $1 million than the other, even though they have the same coverage. And so they're saying, we know our expenses are going to be more over here. So that's how that's in layman's terms, how they explained it to me.
And I agree with that 1000%. Yes.
Awesome. Awesome.
Okay. Are you ready for the next question?
Yes.
Okay. Does this include households who are in areas where flood zone changed or just existing flood policy holders?
Can I take it? And you finish?
Sure.
This affects everybody. There's no special anymore. We are all in one big pot. So there's no, that's when that first chart I showed you, and we had grandfathered and pre-firm and newly mapped and whatever. Everybody on October 1st, we can hold hands and sing Kumbaya. We're all in the same plan. So
Yes.
yeah. Mhm.
Yeah, agreed. And I can piggyback on that. Let's say someone's currently in a home with a mortgage. They were in a preferred zone, let's say an X zone. So their lender may not have required insurance, but just now they've just remapped Pinellas. Oh my, now they're in a risky zone. What happens? Generally, the lenders are on top of it. They will send the homeowners a letter saying, hey, your zone has changed. We now require you to carry flood coverage. If you don't purchase it in 30 or 45 days, we will force it on you. So those folks that do have a current mortgage that are in a new risky zone will generally hear from their lenders.
Correct. Jennifer, there is no pre-firm, no grandfathering after October 1st, correct? Now, let's not confuse the two. That designation does not matter in the rate anymore. So it's not that, I mean, it's just they're all single family homes. That's what they are. And now the rate, you know, we're very clear that every home has a glide path. So if you're in a home that was pre-firm or anything else, it can go up statutorily by 18 or 25%. So you can feel comfortable. There's no big number. Now, if like Paula, if your mortgage guy sends you a forced placement, we're going to put forced placement at 7,500, blah, blah, blah. Like some of that kind of stuff, you're going to want to call your insurance agent, figure that stuff out pretty fast.
Yeah. And on that note, forced place coverage for flood or home is very high for the consumers generally.
Right.
We don't want them to have forced place.
No. What else, Angela?
Yes, the next question. I thought FEMA was going broke, so how will they be able to continue with the lower rates?
Wow, that's a great question. Of course, it's all subsidized through FEMA, Homeland Security, and the federal government. They do vote on this in Washington. In many cases in the past, in my career, I've seen where they've taken the National Flood Program and rolled it into other bills like unemployment compensation and whatnot. So it can get voted on in Washington and be changed. They generally historically have had a budget for flood though overall since 1967, since they started the program.
And just to be clear, the current NFIP expires September 31st. So if you've been around for any length of time, you know we've had call for actions to encourage the Congress to re-up it, because without that, I mean, again, we're just talking about the good side. Imagine it's gone. So that's still on the table that needs to happen. And again, I think that risk rating 2.0 is what's going to make Congress feel like we're moving in the right direction, especially on the heels of Ida and a $50 billion potential claim.
Yes. A lot of times too, now that the vote is coming up, sometimes they'll give it an extension for a few months and then vote on it in December. So that's what I've seen the last times it's come up for vote. They do extend it and work on it a little bit more in depth.
Yeah.
All right, I'm going to combine the next two. In the Seminole example, what makes this not get an annual increase? And then the second part of that is in the Treasure Island example, the rate tripled effective 10/1. Will existing homeowners get this immediate increase?
Okay.
So
First of all, every property is unique, right, Paula? So every property is unique. So that, but what I would imagine in the Seminole one, I went and got a listing out of the MLS for $260,000 concrete block ranch home, 1,300 square feet. So the value of the home is not $260,000, right? It's a 1,300 concrete block, 1960s home. So I think that's a piece of it. I was trying to make easy extrapolations. And so on the other side, a Treasure Island home, similar characteristics, was on the intercoastal finger, almost in a VE flood zone. And again, the real point I hope that you take away, rather than the actual numbers, is proportionately they are paying the same. Equity wise, the fairness is they're paying the same. And so, yes, what has been the biggest takeaway in this is the high priced homes have been subsidized by everybody else. So that's kind of the thing to know.
I could piggyback on that too, Cyndee. We find a lot of very affluent homes that are on the water, Gulf Boulevard here in Pinellas County. People have paid cash. There's no lender requiring to have flood insurance, so they don't carry it. We find that happens nationwide. Then when those folks get flooded, they've had no coverage. However, the government and FEMA will come in and help them on the back end, even though they had no coverage. And I understand that's been a big drain on the flood reserves.
So let me just add to that, because people often believe that, again, we're talking $250,000 of coverage. That FEMA help on average is $3,000. And you can, Annalisa Weller is on this stream. She can tell you that doesn't get you very far if your home gets flooded. So, that's kind of the hope and wish policy, not the prudent policy. So again, but we have a lot of people in high priced areas that have chosen to self-insure. If you don't have insurance, you've self-insured. That's the policy you're on. That's the policy you're on.
Exactly.
All right.
Go ahead, Angela.
We have a few more. Does this apply to those 3 counties, or is it Florida wide? If not all of Florida, is there a timeline for the rest of Florida?
So let me be clear. This is the United States of America. Everybody is going October 1st. So help us help other realtors getting this message out there. I happen to have some resources that I was able to give you, that some people have done some work to show specific counties in Florida quicker and easier for you to look like an awesome hero on social media and help you get the message out. But if you go to the FEMA links I gave you, it has a summary for every state. So it has a state graph to show you how many in a specific state in each of those. And then it breaks it down by county or zip codes. So if you want to do it for your particular area you cover, you can have a good sense of it. 100%, this is unilaterally everyone in the United States. This is NFIP changing.
Yes, yes.
Okay, another question. With the new 2.0 risk policy with flood insurance not be going up 18 to 25% yearly?
So it depends where you are, right, Paula? So if you come out, for those people that are getting a decrease, they're now at an actuarially sound rate. Now, just like everything else in life, it's not going to stay stagnant forever. Some of the conversation has been they expect it to be maybe 1 or 2 or 3, but in everything we do, I would assume cost of living, period, just a good planning number. So 3%, but yes, that's the whole point. Now you will see a number, and unless you're on the glide path, that, like, if that number's $3,000 to a home you sell, that's the number, and then it'll just be more or less, hopefully, cost of living kinds of things, except if you're in an area that has a claim. I'm told there will be a factor, so in effect, the way I think of it is you're probably paying off that claim over the next 20 years, kind of in general, just like a car insurance. When you have an accident, they're going to build that into the rate. So but assuming all things stay, you got a rate, you're there, then that's what I was saying. It takes away the fear, uncertainty, and doubt I've felt trying to say to clients, how do you plan for the future? If I'm retired or have a second home, can I afford to maintain it? And I think a lot of people worry in Florida about that.
Yes.
I also have to tell you guys, because I was on the NAR PAG for weather events and what's coming with, different factors out there. We have to get this under control. We are impacted, and there's other issues and financial pressures facing us. And so getting this on solid footing is the foundation for the future for our communities. no doubt about it. There are third parties out there like a BlackRock, like different financial institutions that their thought is, I don't necessarily want to invest in areas that could be flood prone. I don't necessarily, and again, when people start stigmatizing, it starts impacting values. And so we've fought really hard to say, again, we need a good, reliable system over stigmatizing and hurting specific areas as well.
Agreed. And if you wouldn't mind if I went back to a quick basic just for a second, what does flood insurance cover? It's rising tidal waters. I have folks that will buy a home, move in, they go out to dinner, they come home, a pipe broke in the wall in the kitchen and they've got a foot of water in their kitchen. That's not a flood. It's not rising tidal water. Same with what if a tornado popped up, blew off a corner of your roof and you had 2 feet of water pour in. Once again, that's not flood, it's not rising tidal water. That would be a wind claim. So flood covers rising tidal waters if a hurricane brings it in, or in some of our areas here locally, we have some neighborhoods where in a heavy rain, the streets can flood and the drainage isn't working so well. That sometimes builds up. If that comes up into your house as well, that is considered a flood. So flood is for rising tidal waters.
Thank you, Paula.
Thank you. All right, I'm going to combine the next two. For $1 million home, how much will the increase be monthly? $50? Sorry, I don't understand how there'll be equity with this news.
Well, I'd say, oh, I'm sorry, go ahead.
No, I didn't hear the whole question. I just heard how there's equity. So go ahead.
Yeah, the first part of it was for $1 million home, how much will be the increase? How much will the increase be? Estimated $50. And then they're saying, sorry, I don't understand how there will be equity with this news.
Well, I would say that's very hard to answer because each property is unique and everyone has their own rating and their own elevation. So for me right now to answer that, that would be extremely difficult because it is all individual. So I'm sorry, I couldn't answer that right now.
Thank you.
And I would make the analogy, Paula, and see if this makes sense. Currently on your homeowner's insurance, it's a factor on the value of the home. So a $250,000 home typically doesn't pay the same homeowner's insurance as $1 million. Am I correct?
Correct.
It's proportional. And you'd see that vary based on value of the home, age of the roof, all those factors. So again, it's updated and it is more equitable based again on the value of the home, prior claims, kind of property, mitigation. As I said, there's all kinds of, there's a 37-page report. If you end up wanting it, I can get you a link and you can have it by your bedside and get to sleep early every evening. But I'm happy to, I've read it. It's a little over my head scientifically, but it goes into all the stuff that they've done actuarially. And there are people with probably glasses like me sitting in a dark room figuring all that out.
Well, and also we have preferred flood zones. You're not generally required by your lender or financier to carry flood insurance, but consumers or clients might want to still purchase that. Those rates are going to be changing as well as of October 1st. We used to have cookie cutter rates, so we knew what the rates were. That's changing a little bit too, and that will vary according to the property, but there still will be preferred flood insurance that will be less expensive than, of course, if you're in a risky zone, generally speaking. So there are preferred zones with preferred rates.
So I'm hearing people say that the links don't work. I, again, was doing this at midnight, trying to get you guys all this and trying to make it easy for you to read and see it. So I will get the links for David to include in the email that he sends out. So not to worry.
Great.
Again, I sell real estate.
All right, a couple more. How does this change major renovation? Will the home have to be careful of how much they spend before they are required to elevate or take other measures to mitigate?
I don't think that's changing, is it, Paula? We still have the 50% rule?
Yes, as far as I know. And I would say that many of y'all might already know this, in some of the risky zones, the home is built up, and let's say they've got a garage and storage area underneath. The flood coverage starts at their level of living and higher, so it's up at that next floor. So a lot of folks go in down below, put in a bonus space, pool table, bar, kitchen. None of that is generally covered with the FEMA flood policies because it's below the inhabitable living space. So people do those updates knowing that it won't be covered on their flood insurance.
So one of the things Trey Goldman pointed out to me, just to kind of give you guys perspective, he was saying before Hurricane Andrew, insurance companies in Florida particularly were going for market share. And after that, with that huge loss and understanding what's possible, since then, the trend, especially in private companies, and we're joining it, is to rate for risk, right? Before they were trying to just get bodies. Now they're trying to manage their risk because again, we talk about these rates, but one of the things that's a factor in both flood insurance and regular insurance is the reinsurance market. So while we didn't get hit with Ida so much here, the insurance companies will have to be hit and it will impact all of us. And so again, sometimes people miss that point and sort of feel like, oh, well, it didn't hit us, we're good. But it will, the way reinsurance works. And again, there are people that are smarter and more expert about that than me, but what they've said is at both the homeowners and the flood, that's been an issue, is the required reinsurance, and things like Ida definitely impact that.
Yes, and my understanding is worldwide, the reinsurance rates have pretty much gone up 3-4 times, and that's trickling down to the consumers.
Correct.
All right, I'm going to combine the next two. First, it's what about the Cobra zone? Replacement costs do not seem to make a difference in the flood quotes I've gotten, especially in a Cobra zone. Private quotes are not competitive. What option do buyers have in those zones that have high elevations?
Wow, that's a great
Cobra
question.
zone is, so you take
Yeah, the Cobra zone, we call it, is a zone that's been deemed by FEMA uninhabitable. For example, I just had a client up in Apalachicola Bay in one of those zones, and FEMA would not offer him a policy, neither would my private companies. They consider it unbuildable. That's what I found whenever I've come across this for years. Now, eventually FEMA might go in and remap those, and they could become not a Cobra zone and an AE or VE zone. So they're still very, very challenging. Every experience I've had with it, they have been not able to build in those zones because they can't find flood insurance.
Thank you, Paula.
Thank you. All right, last question, guys. Why won't lenders allow high deductibles like 20% to get the rates down?
Boy, that's a great question. Maybe we can ask some of our lender affiliates. What I found, a lot of the mortgage companies will only allow up to a $10,000 deductible on a flood policy. Many lenders on a typical mortgage have a cutoff at that. Maybe some will allow higher eventually. That might be something we need to look at lobbying for eventually, because that could certainly help bring down the rates.
I think those are possibilities. I think you'd have to, though, show it in escrow, because the biggest challenge is, just like we see in some condo communities, they have an event happen and they don't have the deductible to start the repair, the cycle. I will tell you, just to take you back though, with a great question, is when bigger waters happened, you might not remember this, but there was no deductible. There was no bigger deductible. It was only $5,000. Might have only been 1,000. There, you paid it in one time, not monthly. Like, there was no escrowing it. All these factors, because our clients helped write affidavits to Congress to help say that. And so we do now see up to 10,000. But again, I think the lenders, get nervous that it's a big number for the average consumer. When people talk about, you listen to the radio and say how many people have certain savings on hand, people are one paycheck away. You don't want to have an asset they have insured not be able to get repaired.
Exactly.
That concluded our questions in the Q&A.
So Cyndee, thank you very much for this terrific presentation. It's been very valuable and timely information, and I'm sure all of our members have appreciated. And of course, to the members, we hope you do appreciate and found this program to be useful. Paula, we want to thank you for your support and your involvement and all the good answers that both of you provided. Again, thanks
Right.
everybody for attending. Great presentation.
Thank you so much.
Now go out and share the information, everybody. And if anything like it's crazy, breathe and bring it to us, but don't scream. No screamers.
Awesome.
Thanks, everyone.
Bye. Thank you.
Have a great day, everybody. Thank you again.